In November 2018, IMF published a report. It is called Casting Light on Central Bank Digital Currency. Central Bank Digital Currency, or CBDC, is a new word. It means e-money, digital version of the fiat currency. In this video, let us explain how EXC could be viewed as the best CBDC platform.
What is the EXC platform in a nutshell? The EXC platform is designed as one of the most energy-efficient digital currency platforms. It can replace 1/3 of global settlements with as little as 7 kilowatts per hour energy usage. This is equivalent to the energy consumption of only 30 refrigerators. The EXC platform is designed also to have the highest security feature against cyber attacks. We are planning to apply for EAL6, the international standard for security called Common Criteria. The total investment required to cover 1/3 of global population could be minimal compared with the traditional payment systems.
IMF chief Christine Lagarde made a powerful speech on the 14th of November at the FinTech conference in Singapore. According to her, bankers need to be open to change, embracing change, shaping change. Technology will change and so must we. The nature of money is changing. The digitalization might be one option. Various central banks around the world are seriously considering central bank digital currency ideas, including Canada, China, Sweden, Uruguay, and IMF. New specialized payment providers offer e-money from Alipay, WeChat in China, Paytm in India, to M-Pesa in Kenya, responding to what the economy requires.
Dr. Christine Lagarde pointed out 6 important issues that needed to be addressed to be a successful digital currency. A. Financial inclusion of people in remote and marginalized regions. B. Security and consumer protection. C. Privacy. D. Risks to financial integrity. E. Risks to financial stability. And F. Risks to innovation.
The IMF report touched upon cryptocurrencies as well. Let us explain our interpretation of why Bitcoin has emerged. There is a clear difference in opinions based on their ages. For those over 50 years old or above, not many people understand why there is a value. However, for those in their 20s and 30s, whose expectation is about their respective government for their long-term social securities and pensions is gloomy, there is more percentage of population who are interested in Bitcoin and alike.
What is the difference between the cryptocurrency and digital fiat currency platforms? If you analyse the user's preference in each category, what consumers are looking for are the same. These are high security, lower transaction cost, thus lower cost of operation, and convenience, for example, fast settlement.
The IMF report has listed 11 criteria for users to judge different forms of money. For means of payment, they list 7 criteria. 4 of them are to maximize users' benefit. First, liquidity, in their definition, payment on demand. Secondly, scalability. In IMF's explanation, they define scalability as payment on any size. Scalability can mean that the per-transaction settlement cost could become lower as the number of transactions become larger. In the case of EXC, the scalability in both sense works. Third is acceptance to any device and any network. In the case of EXC, smartphones with NFC function inside could function as the payment terminals just like mobile banking.
Fourth is interconnectivity to other systems. IMF report says extra services like preferential access to loan providers. Fifth is minimized transaction cost. Sixth is a degree of anonymity. IMF's report implies that a government is allowed access to private data. Seventh is settlement speed. It concludes the shorter the settlement speed, the lower the risk the user would feel. 4 further points relating to store of value are identified as user criteria to judge different forms of money. Returns, nominal interest payment needs to be paid. In the case of EXC platform, in addition to nominal interest payment, there is an additional value from creation of optionality. This design of system has already got the patent in Japan. The same patent is being applied in the EU and the US. Second is against theft, the ability to reverse fraudulent transactions, and against cyber hacking. The EXC has the patented superior security system to deal with the theft. Third is the ability to claim ownership or recover the access if lost.
The default risk of the money issuer is the last risk identified by IMF. In the case of EXC, the issuer called GMF has no liability. It has US dollars as assets. We designed it as the bankruptcy remote structure. It has no shareholders. It is a foundation company registered in Cayman, one of the famous neutral territories. We even got the certificate that GMF will not be taxed for 20 years from Cayman Authority.
Let me explain the security feature and why we believe EXC has the superior security feature. EXC system has the ability to apply unique identification numbers to each token and trace each token. With this ability, EXC has 3 separate databases recording transactions in each different format. This will enhance the protection from cyber attackers. It is likely to deter the use by money launderers as they tend to dislike traceability. We are applying this as a patent for the EU and the US, while Japan has already granted our claims to this patent. If anybody else is talking about 3 tracing systems or 3 database systems in digital currency platforms, that system may have infringed with our patent pending.
Let's go back to the economics theory. The money needs to have 3 functions: a store of value, a unit of account, a means to transacting. Bitcoin and most of cryptocurrencies have only the 3rd function. Although IMF report does not go into detail, it dismisses Bitcoin and Ethereum as potential candidates for digital currency platforms for this reason. We, on the other hand, have developed Keynes' supranational currency idea. Keynes proposed such an idea with the combination of the establishment of the World Bank and IMF. The US Treasury Department snatched his team's noble idea of establishing the IMF on top of each individual central bank. EXC platform therefore snatched good elements of the IMF and digitalized the system.
Cost of operation of digital currency platform is simple. It is the sum of 1. Server time or server usage, 2. Energy cost, and 3. Labor cost. If we can save each cost by 100 times from the current banking system, we are achieving what Elon Musk has achieved in SpaceX compared with NASA. We believe we achieved the cost reduction by 100 times of each of the 3 factors. The result is staggering. We can cover 3 billion of the developing world population with only 7 kilowatts per hour, the total power usage of 30 refrigerators. We are planning to have no human intervention in 2 to 3 years, which will make the labor cost minimal compared with 2,700 people working for IMF.
If you look at Bitcoin, you would realize how much the system is not scalable. Different critics point out different weaknesses, but the energy usage itself is enough to dismiss as a potential candidate for digital currency platform.
In EXC, we have the function of storing value, which includes earning interest from fiat currency holdings. But the most striking value comes from the optional value created by the mechanism where the downside is protected but has the unlimited upside potential. Our EXC's money supply is decided by the market price instead of central bankers judging the market parameters. In this way, we should be able to eliminate any human intervention once the system development phase is complete.
The digital central bank is a special purpose vehicle to hold fiat currencies, initially US dollars.
GMF's server is programmed to supply the nth token to the market when the market price reaches at N dollars.
The total US dollar reserve at GMF would always be at 1 plus N times N divided by 2 when the EXC's historical highest price is N dollars. The reserve is equivalent to the shaded triangle.
As there are N tokens in the market, the average US dollar reserve per token is equal to 1 plus N divided by 2 per token when the historical highest price is N dollars.
This means our digital central bank always has the ability to buy back all the tokens in the market at half the price of the historical highest price.
This has an optional value.
In a system like EXC platform, whose operational cost is minimal, this algorithm enables GMF to create net positive value against US dollars.
This algorithmic system also received the patent in Japan. Let me explain the above value creation with pictorial illustration.
The bell curve distribution shows how artificial intelligence traders make the investment decisions on FX.
Say current exchange rate is €1 to 1.13 US dollars.
Without any interest differential, the future exchange rate is described as the bell curve.
There is a small probability of doubling the price, like €1 becoming 2.26 US dollars, and the similar probability of €1 becoming 0.565 US dollars.
In the case of the US dollars to Japanese yen, it used to be 360 yen per dollar, which is more than 3 times the current yen, which is 114 per dollar.
This page illustrates that the protection mechanism of EXC value does not fall below 50% of the historical highest price, which is based at 100%. Our server will try to tap the falling price situation to increase per token net asset value. But in reality, the investor's psychology works to keep the 50% of the historical highest price as floor. This is the same investor psychology as Berkshire Hathaway's share buyback program and its share price.
The probability shown by the area covered between the red and blue line in the bottom left corner will move upwards over the 50% line. The probability of betting EXC over US dollars seems to have always more than 50%, even the EXC price is the historical highest.
If the EXC price falls by 49% from the historical highest price, the probability of winning by betting EXC over US dollar will be distributed in the red half bell curve.
Thank you for listening. Please visit excore.org where you will find the design and technologies attached to the EXC platform in detail.